Something really interesting is happening in the investment world, and it's catching a lot of people by surprise. The very experts who built their empires on real estate, the folks who practically wrote the book on it, are quietly heading for the exits. So, what in the world is going on? Let's get into it.
Now listen to this. This is a bombshell. This quote isn't from some newbie investor getting scared. It's from a seasoned pro, someone whose entire public persona was built around buying and holding property. Hearing them say this is like a world-class chef suddenly swearing off cooking. It's a huge red flag that the game itself has changed.
So that's the real mystery we're unpacking here. Why this sudden change of heart? This isn't just one person's story. It's a story about a breaking point that thousands of smaller, seasoned investors are hitting all at once. We're going to break down exactly what's pushing them out.
Okay, first things first. Before anything else, we have to talk about the money. It all comes down to the cold, hard math. Because at the end of the day, an investment has to make sense on paper. And for a lot of these landlords, it just doesn't add up anymore.
This right here really lays out the choice they're facing. On one side, you've got your rental property. It's a ton of work, right? Constant headaches. I'm talking broken dishwashers, disputes between neighbors, the whole shebang. Plus, your cash is tied up, you can't get it out easily. And on the other side, a simple treasury bond. Zero work, total peace of mind, and you can sell it tomorrow if you want to.
So after all that hassle, the calls, the repairs, the stress, what do you actually walk away with? Well, once you pay the property taxes, the crazy high insurance, all the maintenance, the actual cash flow on your equity is averaging just 4 to 5%. That's your reward for all that effort.
And here is the kicker. This is the whole problem in a nutshell. You can get that exact same 4 to 5% return from a government bond without lifting a finger. I mean, why would you deal with tenants and toilets when you can get the same paycheck for literally doing nothing? The math just becomes impossible to ignore.
And it gets worse. That little 4 to 5% margin is getting squeezed tighter every single year. You've got property taxes going up, insurance premiums are just going through the roof in some places, and maintenance costs and city fees are constantly chipping away. The reward for all the risk and all the work is just evaporating.
So the math is already looking pretty shaky. But believe it or not, that's only part of the story. The second massive factor here is the regulatory environment, which has turned into an absolute minefield for landlords.
It's become this crazy obstacle course. Imagine your own costs, your insurance, your taxes go up by 50%. But the city tells you you can only raise the rent by $60 for the entire year. It makes no sense. Plus, you're constantly worried about lawsuits, which means you're always paying for lawyers. It's like you're playing a game where the rules are being rewritten against you while you play.
And if you think that's bad, get ready for this number, because it is just wild. In certain cities, if you, the owner, want to move back into your own house, you might have to pay the tenant a relocation fee of over $38,000 just to get the keys to your own front door. It's just unbelievable.
Okay, so this brings us to our third, and honestly, maybe the most powerful reason of all. It's the hidden cost, the one that never shows up on a spreadsheet. One investor brilliantly calls it the stress tax. The perfect way to think about it is background noise. Real estate is not passive income. It's a constant low-level hum of anxiety. A text about a broken water heater, an email about a neighbor's dog, a letter from the city about a new permit you need. It's this mental weight that just never, ever goes away. And this quote just says it all, doesn't it? For these investors, selling a property isn't about giving up. It's about buying back their freedom, buying back their peace of mind. It's a deliberate choice to simplify, to shut off that background noise. That feeling of relief is suddenly worth more than the rent check.
So if they're cashing out of all these properties, the obvious question is, where's that money going?
Well, they're pivoting, and they're pivoting to a strategy that is truly passive this time.
This is what the new game plan looks like. All that equity is being poured into a mix of things that are liquid and diversified. You got your steady income from tax-free bonds, no headaches there. Long-term growth from S&P 500 funds, a little international exposure, and yeah, even a small speculative bet on a Bitcoin ETF. The key is, it's all manageable from a laptop anywhere in the world. So let's tie this all together. What's the real lesson here for all of us? This isn't just about real estate. This is really a framework for how to think about any investment that takes up your time and your mental energy. Here's the bottom line. A truly smart investment decision isn't just about the financial return. You have to be brutally honest with yourself about the mental and emotional cost, that hidden stress tax. And when that stress starts to outweigh the financial reward, it's probably time to make a change.
So I'll leave you with one final question to think about. Look at your own life, whether it's a rental property, a side business, even a stock you can't stop checking. What is its stress tax? And when you really get honest about it, is the return you're getting truly worth the price you're paying?